Well, hello, folks. I'm L.A. Little, and this is your weekly NeoTA wrap. We take a look at these markets, and we do it from a neoclassical perspective. Each time we ask ourselves what happened last week, and what does it tell us about the coming ones. I do the show every Sunday night, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel L.A. Little. You can catch it there and play it on any device anytime at your convenience. Last week we actually had an interesting scenario in that we ended up with a market that didn't do what we expected. What was expected was Santa Claus rally, right? That we were going to move up last week, we were going to press higher into the end of the year, and then we'd find out what the market wanted to do the beginning of the year, but that's not the way it ended up. As you can see, the percentage change over the week, down anywhere from 1.7 to 1.2. On Friday, we actually had an intraday reversal. We gapped higher, reversed, closed lower. Again, not the sort of scenario you'd want to see if you were bullish. And so when we look at the market from that perspective, that's not a very good sign. Now, the good part is that we actually ended with the Russell doing what you would want. But before we get to the Russell, let's look at the S&P 500. What we had was failures on the S&P 500 and on the Dow Jones with respect to these retest regenerate zones. You got under it on Wednesday, again on Friday stayed under it. That's a break. That says that more than likely you're in some sort of range trade. And if you look at that from that perspective, well, what do you have? You have kind of three ranges going on. And if anything, we are in the top part of that range still. So from that scenario, right, you're in the upper third. You could say that's good, but at the same time, you could say that's bad. Bad in the sense that there's probably nowhere to go but down if that's the case. If I look at the Dow, on the daily here on the Dow, you can also see the same sort of thing. And the reason I'm doing dailies on the weekly show is because that's where the action is right now. And there's the swing point high, broken underneath, same sort of scenario, exactly the same setup. If I look at the Russell actually held on that same scenario, and what it did is it came back into its retest regen zone, a little small high right there. You can see it got into it right there, comes into it, has less volume, flips around. That's a retest regenerate that actually succeeded versus failed. So when you look at it from that perspective, what do you have? You have mixed markets. The markets really haven't told us yet, and we kind of suspected it would come into this week. They haven't told us yet whether they're actually going to go up or they're going to go down. Now, as part of that, if we look at the weekly, you still have large ABCD structures in place, potentially taking us much higher, right? That's the scenario that's set up that could push us higher. But in the meantime, we've got a down week here, back into this retest zone, or actually back into the thick of this zone, I should say, these highs. And it says, hey, if it is going to break out, it's going to take some work. It hasn't done it, it hasn't been able to hold it, is the way I should be saying it. And that also is telling us that we may have some more congestion type action going on. If we look at the Russell, and I want to pull the Russell onto the weekly here, there's the retest regenerate zone on the Russell. It also has come back in. So just like on the dailies on the Dow and the S&Ps, the Russell has come back in to do a full immediate retest regenerate off its prior swing point high that it broke, and that was the break right here. And so that push up is also putting this in a little bit more of a defensive mode. Held on the daily, so far has held on the weekly. The question will be, is the Russell going to take this market higher or not? And so index-wise, we've got some divergence, if you will, between the various indexes that are out there. If we look at the ox markets, and the reason I'm going to flip to the ox markets next is because a lot of this has to do with the dollar. And so if I look at the dollar last week, right, big spike up, congestion, another spike higher. Is this dollar going to run to the moon? You know, what's it doing? If I look at it on the weekly, nice big spike up. And actually there's ABCD structures on the daily and the weekly that seem to suggest that this thing is almost finished, right? That finish mark would be right up in there. So the dollar on these time perspectives looks like it's actually finishing, but you can see the strength of the dollar when you look at it on the monthly clearly has broken this swing point high, now has broken that swing point high, and that simply leaves this high up here to go after next. And I suspect it will go after that next. The question is will you get this thing to pull back or not, or is it going to be a straight shot to the moon? Now remember, when we saw the dollar spike up back in this time frame, and let me kind of draw it out here, what we had there, and we're talking about from June, middle of June, up until October, September, what we had there is as this thing continued to rise, we eventually had the general equity markets, especially overseas, start to get hit. That carry trade that actually favors those markets really had to be reversed, and reversed hard. Well, folks, we're getting the same thing right now. We're getting this spike up, right? And now this kind of vertical spike, just like we saw at the end there, a vertical spike. And that really put the pressure on overseas markets. And eventually we felt it here, and when we did, we got the pullback on the dollar. That was this spike up here. That gave us the pullback on the dollar, and then we got another rally in our equity markets, ours being domestic ones, U.S. markets. We're seeing the same scenario again now. Spike up, has been rallying up. Now it's getting that kind of vertical move going again on the dollar. Is that going to lead to some more turbulence like we saw back in October? Could very well do so. And when we see the divergence on the indexes, and now we see the dollar doing what it's doing, it really makes one wonder if in fact that's what we're going to see. One other thing I'd like to bring to your plate is this chart. And this is a chart I pulled off Malden Economics, came out today. So they've kind of got their classical trend lines drawn in here. I don't have a better chart to show you back from way back in 70s. But you know, back here the dollar was pegged. It was pegged to gold, didn't move much. Once those currencies started to float, which is what happened here, the dollar began to lose its value. And it lost a tremendous amount, right? 20–25% of its value. And then what happened is we got towards the end of the 80s, I mean the 70s and into the 80s. This was Paul Volcker time, if you remember, or if you read your history books. And Paul Volcker started raising interest rates, and he raised them in a huge way. And what did that do? That drove the dollar to a high of 160, or a little over 160. And then as those interest rates came down, right, the dollar also depreciated right back down against the rest of the currencies as these floating currencies were trying to figure out how to float. Well, we got a subsequent rally here in the late 90s, and then as the market, you know, came down in 2000 and on into, you know, the rest of the time period here, you can see we've basically been crawling sideways. Well, what is it doing now? It's actually starting to break back above those swing point highs. That's what we just looked at on the dollar chart. It's going after this next swing point high. But after that, folks, it's all the way back to here. Once it gets over this one, which is the one I showed you, there's nothing in its way until it gets back to 120. Now, what's that going to do to other currencies? Not so much other currencies, but other equity markets where you have huge carry trades that are going to have to be reversed if this dollar really does continue to spike like it's doing. And as you can see on a long-term chart, this spike so far really isn't all that much. It could go a lot farther. And so when we think about the dollar from that perspective in the long-term sense, and we see what kind of damage it's doing in these markets here and now when it spikes, you know, that doesn't say that it's going to cause, a upheaval and a complete collapse or anything like that in the equity markets, but you can certainly see that as the dollar spikes, it does create upheaval. People have to, well, not people, but large institutions, large trades have to be reversed, have to be changed. And to me, that's probably one of the more, not so much sinister, but one of the more dangerous scenarios that's going on with these markets right now. And a large part of what has happened to the oil markets is directly centered on that. You can see oil cannot lift as this dollar keeps rising. You can see it on the weekly, the total destruction, 45% down last year on oil. This kind of a scenario, right, puts a lot of upheaval into the market. It's already done that. The question really that remains to be seen is, can we get over this in the near term, and then eventually, this thing sort itself out. In other words, the dollar quit going skyrocketing higher. As I said, the dollar's finishing up or attempting to finish up ABCD structures on the daily, on the weekly. If that leads to some sort of a pause and a pullback, then I suspect the equity markets will be okay. But we've got a big week this week. We have the ECB. I actually thought the ECB was this week, but they changed the calendar because they're doing it every 2 months now, not every month. And so they won't be until the third week of this month. And so I'm beginning to think that unless the earnings cast a different shadow on this market, that ECB is going to continue to be the big driver, because Draghi has been saying and continues to say in various remarks to newspapers and magazines, in terms of interviews, that they are going to do QE. He keeps saying it. He hasn't backed down from that. How he implements it, I really don't know, because certainly Germany is against it, or certainly appears to be against it still. And if it's going to be a simple majority, of course he can probably persuade the majority to go with him, and we'll see. But that has been driving the euro lower. If we look at almost all the other currencies, they are at lows or continue to make lows. Here's your euro just falling off a cliff. I've said before, not only here but in other venues, in some articles that I've written that are available to you here on the home page if you want to come in and look at them. Down here, just read into the trading articles. Down here there's a one on currency. But what I've said over and over again is that the euro is going to go to par, and it looks to me like it is, if it breaks, and it looks to me like it's about to try and break it all. This is the place where the euro has to find itself, or it's on its route to par. And folks, this is a large ABCD structure on the way down. If in fact that's what happens, you have an ace point that doesn't even have an end to it yet. If you come back and do the ABCD structure off of this drive down and take this high, right, you can see that's going to push you back into the 116, 118. I would expect you get a bounce in here somewhere, setting up what should be from this A point, right, another large ABCD structure to the downside, which will probably take it to par over the next 6 months to a year. So that's, to me, the largest concern. A skyrocketing dollar is going to have a lot of impact elsewhere. It's going to have it on the commodities. It's going to have it on equity markets. And that, to me, is probably the biggest thing one should be looking at going into this new year. And I'm kind of using this show as kind of a macro view. That's, to me, probably the biggest concern. And it's going to also potentially fuel geopolitical issues, which could also fuel more instability in the equity markets. Okay, so as far as next week, next couple of weeks, I think earnings are going to be the big thing this week. You've got Alcoa kicking it off tomorrow. You got a lot of the big banks this week. You got Intel, LLTC. There's a number of reports this week is probably going to give us a good idea as to whether the dollar is going to be the guinea pig in terms of, you know, missed estimates or lowered estimates or things like that, and how the market reacts to it is probably going to set the tone for the rest of the month. So I would be looking very closely as to how this market reacts to all these earning numbers that come out. You've also got a lot of economics again with PMIs this week and some industrial production numbers. That too will have a lot to do with what this market does going forward here this year. I've got a lot of questions. I'm probably not going to be able to get to all of these, but I'm going to segue into the various viewer questions, and I'll just take them one by one here. And if I don't get to yours tonight, my apologies. I will try to get to them, if not tonight, then the rest of the week, you know, starting tomorrow. So let's pop into here and see what we got. So the first one is, it's not this one actually, it's BA. So BA is the first one. Okay, so BA, and the question on BA has to do with weekly ranges. So let's pop into the weekly to start with. So, and the question is, let's see here. I'm looking at these on a weekly trading, a range trade on Boeing and GM. Can't see much in GM. Boeing, it appears to be much stronger and have the better support levels. What do I think? Okay, so let's look at Boeing first since I have that one up. Okay, so actually, you know, Boeing does have some decent ones. Now, the thing I would note here, looking at this on the weekly, is this spike down on this low had some decent volume. This spike didn't. Then you came down again. You really didn't. That says, okay, I got a pretty good bottom in place. Now, you had a decent spike back up on this bar, and the ones prior to that, not so much. So that tells me that, yeah, it's not a bad range down here on the downside. If I pull it back up, you can see that this swing point high here was really testing the breakdown bar, and we got almost back up to it. Had a big spike down in December. That was when the market took a tumble. Of course, it comes back. Yeah, I think this is a pretty solid range, and if you want to sell the tops, buy the bottoms, this is probably not a bad chart to be doing that on. Let me look at the monthly real quick, and let me just see what the monthly looks like, because that could have an impact. Yeah, so you got a range trade up here, and that kind of confirms the same thing. So to me, this does look like a decent range. The only concern I'd have is that you actually have a high volume spike with volume off the top, and you could test all the way back up to there, which would be out of that range I just showed you. The range I just showed you was right in here. It actually could trade back to the top of that range. And so if you're doing some sort of puts, or if you're selling short, you have to allow for this to actually get filled as well if you're on that side of the trade when it comes up here. So in other words, if I'm trying to short this and I'm shorting it right here on this range, my stop has to be above that top range. I can't really put it right above here, because I have a higher probability of getting stopped out. On the bottom side, yeah, I think you can, and I'm looking to see what that looks like. Yeah, I think you can put your stops pretty close up underneath there. So that looks like a pretty good range trade if that's what you're trying to do. Let's look at the GM question, see what that one looks like. So it pops over, that's on the daily. Let's see what the weekly looks like. Okay, so the range here, this one keeps making lower lows. So if I were doing anything with this one, I would probably be trying to trade the multiple ranges that exist, and those multiple ranges are here. So you can see there's like 3 of them basically. I probably could redraw this one just a little bit higher. I mean, I could probably draw it right about there actually, and that would make them all about equidistant. And then there's actually another one up here, although there's not much up there. So given that, we're over this breakdown bar already. Yeah, I think if you're trading a range here, you really have to trade the meat of it, which is there. So I would be using that as kind of my meat of the range. It's right at the middle of that range. The shorts would be up here, the buys would be down there, and I probably would be a little more inclined to be shorting this than buying this, because your trend on this really is down to the downside. It's really not to the upside, right? You've got kind of this trend going to the downside here. Let's quickly look before I make that final prognosis to see what the monthly looks like. And the monthly actually looks the same way. So yeah, I think that is the trade. I would probably be trading this, if I'm trading that range, I'd be more inclined to short it more and buy it less. With the downside being a little bit more risky, the upside being a little more risky. In other words, when you're buying at the lows, then selling at the highs. I don't think this thing's going to get above this 38 area. It looks to me like it's probably going to hold that. So that's 37.13, 38.05. That looks pretty good. So I would be using this right here as kind of my stop out area on the top side, my buy area here on the bottom side. And again, there's a little bit more risk on the bottom side than there is the top side. All right, let's pop to the next one. Let's see if we can get most of these done here. So another one is this has to do with China. China's been on a tear, and that actually was this particular member was asking me to take a look at China. He had talked about these before back in December. They've taken a pretty good run, and honestly, I don't remember what I said in December. But hopefully you did get long and made some good money on it. This is an ABCD structure to the top side, and I'm viewing this. Well, let's just pull to the weekly and look at the weekly. It was an ABCD structure up, and it does not look complete. And that structure goes from here to there, back down, right, and back up. So that still has a long way to go to complete. Volume surges look really good, and if you look at the Chinese market, of course, it's got huge volume surges as well. This is China Life Insurance, pretty solid, large company, looks pretty good, and I think you just have to try to ride it on the way up. I think the question here was, what is the places to try to get into this again? Yeah, he's looking at midterm. Sorry, I was trying to read it. And well, ideally you'd want to get it around 55.50. I don't know that you're going to get that. Let's go back to the daily. And that 55.50 is off this spike. That low is there. I would use this range right here, even though the TA Today charts have you at some lower ranges because it doesn't have enough to work with up here. I would use that range as my entry. So it's about 55 up to 57, somewhere in there. And you just have to realize that you could, given the spike, I mean, these things have spiked tremendously already. I mean, they're up 30% in what, a little over a month. From this level to here is 30%. So you could easily get a move back into where the TA Today charts are showing you. But I don't know if they're going to get there, because when you get this kind of momentum, a lot of times they just don't want to come back. So I would probably try to edge in here and then expect to buy more here if you had to, right, if it comes back that far. So that's LFC. If we look at the other one, IDCBY, and this one's over the highs too, has less volume, so it's suspect. It has a deeper retrace. Let's see what the weekly looks like. Yeah, now this one's already completed the ABCD structure on the weekly. So you had to push up, back down, right, and back up. So this is over it on the weekly. It's also over this high, and you can see the kind of volatility that can be in this stock. I would use this swing point high on a full retest regen if it comes back immediately. So that puts you back into the $14 area. Yeah, that looks like a pretty good spot, around 14 and change. Let me go back to the daily again. 14 and change. Yeah, that does look like a good spot. Yeah, somewhere around 14 up to about 14 and a quarter would be the number here. And then looking at the tracking index, which is ASHR, this one also has broken over the top. The big volume is on this bar back on December 4th. That's when these things really took off as a group. Pretty good spike down. Let's look at the weekly on this one. And there's actually no ABCD structure in place. This hasn't even put a B point in. Actually, it has, barely, just barely. So you got an ABCD structure that's really just getting underway still. I mean, the B to C, excuse me, the C to D is just getting underway. That projects a long way up. So if I'm trying to buy the index itself, I'm going to use, let's take this off, I'm going to use this area right here as my key spot to try to get in with a secondary spot up underneath it. Those numbers go like this. That top is 36 and 32, and the top here is 34.80, so anywhere from about 34.80 to 36.30. And then the secondary would be the bottom of this bar to the low of that one. That's about 32 back to 33. So 32 to 33, and then up above it, the 33, whatever that number was again. Excuse me, 34.80 up to 36. That would be the place to try to play them. It looks strong, and I don't think it's coming back anytime soon. A lot of this, and here's the rub with all this, and I'll leave this as the final comment tonight. This is central bank action, right? China's slowing. China's on the verge of a recession if you look at the PMI numbers. Yet the markets are surging. Why is that? It did two things. It opened up its market to foreign investors. That was a large part of this surge. The secondary part of it is the fact that as that money flows in, there's also the expectation that the central bank's going to come in and make it easier to get a soft landing again. And then China's notorious for soft landings. They've been doing it now for 5 years, off and on. So the expectation is that they will ease policy. They'll try to, keep the housing market going, and this thing's going to run higher as a result of it. So it's expectations of what's going to happen. What does that do? Puts more risk. But if you're going to try to go for the big bang, which is here and which is taking place already, you're going to have to assume more risk. This thing can come back, and it can come back in a hurry and hard. So if you want to play it, you got to assume more risk, and that's the way this market's going to work for you. All right. Going to be an interesting week to start the year. This is the week we actually get some volume back. I don't want to discount last week too much. We have divergent markets. The question will be, will earnings power these markets higher? Will the dollar quit surging and settle down a little bit so these equity markets can actually rise? If not, I think we're going to see a lot of volatility here the next week. That's where we're at, and we'll see what happens. I'm a little bit more cautious here to start the year. I think you should be too. Have a good one. I'll see you tomorrow. Take care. Good night.